Hi, and welcome to this week's Retirement True or False. Gentlemen, I've got some great questions this week. Are you ready?
We're ready.
Let's go.
Kyle, this first one is for you, and it is important to reduce the fees on your investments as part of your retirement plan. True or false?
Well, I will say emphatically true, but I will preface it with saying a fee is only relevant in the absence of value, Mark. So nobody works for free, not your mutual fund company, not your advisor. What we're trying to avoid is, are you paying excessive fees in our industry? Because the more money that you have working for you with lower fees, the better your returns are, right?
Absolutely. Sometimes clients don't even know how much fees they're paying in their portfolio. So when you come in, we'll give you a free fee assessment. And what that looks like is clients come in, we take a look at their portfolio. We have great software to analyze all their investments, and it comes out with a really good fee assessment. It shows all of the fees that they're paying their advisor, and typically those are the fees that they'll see on their statement, transparent fees. But sometimes, but not always, there are fees associated with clients' accounts that they can't see on their statement. And that's usually in the prospectuses, which are those big books that you get in the mail.
Everybody reads those,
Everyone
right?
reads those, right? And so those can be called expense ratios. There's other types of fees called turnover, which means the investments that change in your portfolio can impact the fees that you have. So at the end of the day, I think Kyle hit it right on the head. Fees are an issue in absence of value, but when you don't know how much fees you're paying in the first place, it can become an issue. So to reduce those fees means that's going to put more money in your pocket in your retirement to help you accomplish your retirement goals.
And if you want to know what you're paying in fees, give our office a call. Come on in, schedule a complimentary meeting with us, and we'll go over the whole enchilada.
And, or you could just read the perspective cover. And by the way, for the record, I keep it on my nightstand when I'm unable to sleep.
Right.
I get to about page 6, and I'm blowing some serious Z's at that point. Anthony, my next question is for you, and it is, all the information you'll ever need about how to take your Social Security, you can get at the local Social Security office. True or false?
I've got to say emphatically false. So the Social Security Administrative Office is really a resource to get basic information and to apply for your benefit. One of the things that's difficult to get from that office is really a tailored plan based off your individual needs. So everyone's Social Security election, as far as what might be best for you, is individualized. It's never a one-size-fits-all. So I'll give you a perfect example. I had some prospective clients come in, and they had just elected their Social Security through applying with the Social Security Administration Office. And the representative had said, okay, we're going to go ahead and turn both of your Social Securities on right now. Well, what they failed to realize is that the husband had a pension. And when the husband passed away, the wife didn't get any of that pension. So I ran a couple different scenarios with their Social Security, and I said, look, why don't we consider extending the husband's Social Security to get the max credits, because they're locking in a higher survivor benefit. Because when the husband passes away, they'll lose a pension and they're going to have less to rely on for income. So long story short, you want to really speak with an advisor that has gone through this several different times to make sure that we're taking the right approach based off your unique situation, because everyone's different.
Yeah, and we have the software that helps us run that for our clients, right?
Absolutely.
It'll run, how do you leave the max benefit for if you live a long life? If you don't have longevity in your family, well, maybe you do take it at 62. But we just love that the ability to run break-even analysis and really hone in on what the best strategy would be in that client's situation, Mark.
Last question for you, Kyle. The stock market is the only place you should have your money when you're in retirement. True or false?
It says only place?
The only place.
That would be false, right? So it's about balance. And if you've listened to our show in the past, you know that we talk about having a well-balanced, diversified portfolio. And that's not all in stocks, right, Anthony? I mean, we use different asset classes. Maybe you don't have a pension and you need an annuity. Maybe you don't need an annuity. Maybe you want money that's going to pay whether the market goes up or down and you get consistent dividends, right? So we like using alternatives or non-correlated assets in addition to the market. Now, we both agree we want to have some money in the market. We just don't believe you should have 100%.
Yeah, to say someone should have have 100% of their money in the stock market falls under, in my opinion, kind of a blanket recommendation. And when you do that, it's not the right thing, because you have to take someone's individual retirement goals. What are their objectives? What are their concerns? And a lot of the times we meet with people and they're concerned about, pulling money out of their portfolio in a down market and how that's going to have an impact on the longevity of their portfolio. In particularly for married couples, if one of the spouses passes away, what about the surviving spouse? And so having all of your money in the stock market, how are you going to leave your spouse with that type of risk? So I think, Kyle, you hit it right on the head. You want to have some money in the market, but to find that right balance, work with a professional who's done it before.
Anthony, Kyle, thanks so much. If you want more information about anything we spoke about here today, hey, give us a call in the office or go to our website.